Okay, we are officially live now on Facebook. All right, good afternoon, everybody. Welcome to today's Tuesday webinar with A&D Mortgage. Today, we're going to be discussing finding and funding rural and manufactured properties. I'll introduce our speaker in just a few moments. But let me go through the ground rules for those people who are pre-registered and watching us through Zoom. We've muted your microphones and cameras so that we can get a clean recording. If you have a question, go ahead and use the Q&A feature. For those who are on Facebook Live, you can type it right into the live chat and we'll get those over to Mr. Ra, our speaker. And then if you're also on the Zoom platform, you can raise your hand. Last thing that I would ask, no matter what your platform you're viewing through, is if you could please turn off your cell phone so that you can give your full attention to our presenter and be able to get fully up to speed here on the topic. So today our speaker is John Ra. He is one of our top executives on the West Coast and our top executive dealing specifically with rural and manufactured properties. And so with that, I will introduce John and let him take it from here. Go ahead, Mr. Ra.
Thank you, Carl. So kind of you. Hello there. Good morning or good afternoon, whichever coast you are in. So I will go ahead and continue with the rural/agricultural properties. Rural tend to have stigma where people think that it is under USDA. It's not necessarily that is true. Rural tend to have in conventional as well as conforming. So in other words, Fannie and Freddie. So that's where the rural comes in. It must be zoned as rural or RA. It's not my last name. It's a rural area. It has to be from one house to the next house has to be 1 mile distance. So it cannot have producing income property. Of course, it cannot have working farm or stables or horses, anything in those natures. But it can have barns and detached garages and what have you, but it cannot have producing income. Maximum acreage is 10 acres. Normally, the substandards on conventional and non-QM. Agricultural influences like a farm or there is producing vegetable farms, what have you. Yes, those are the case-by-case basis. And we do have our parent company, hard money, Imperial Funds, that was established 2015, but our main company opened in 2005. Generally, we are full service direct mortgage lender. That's the difference between other lender tend to have, they say wholesale direct lender. But if you dissect those lenders out there, main difference is we securitize our own non-QM loans. So that's the whole difference. And our mission statements and models are the power of yes, meaning if you have some outside of the box or outside of the parameters that needs to submit exception request form, yes, I will do that for you. Once the loan is submitted, I will need completed 1003, tri-merge credit report, and if you do have appraisal report, I could submit that for you. If not, depends on the circumstances. I will need a LOE, for example, DSCR, someone who's buying investment property, for example, and they never owned a property, primary, second home, or investment property past 24 months, I will do that for you. Moving forward, our footprints on a wholesale, correspondence, and retail. And these are the maps right there as it's presented. And we are also licensed in Puerto Rico as well. Anything that's red color, we are licensed. Anything that has asterisks next to the states, we could do business purpose loan. You don't have to be licensed necessarily. You could use our NMLS license under that, and has to be investment property only. Okay. And affordable housing crisis, they are still, until this day, they are still stigma. In other words, it could be complexes of a lot of components, social economics equations to uh, inadequate unemployment rates, inflation rates, slowing down in housing market and what have you. And these are the states that are renting versus home ownership. So primarily the rural and manufactured home ownership tend to have in 48 continental states, including Puerto Rico and District of Columbia. In other words, even if in urban states like Los Angeles or New York, Philadelphia, Chicago, Houston, those outside of those states or cities, local states and federal level, they are still stigma. I don't know why there is, but I guess these older folks, older generation brokers and lenders and LOs out there is that Sears and Reeboks, it was a prefab. So I guess the stigma still sticks in psychologically. So that's why a lot of these mortgage brokers and a lot of lenders tend to stay out of those parameters. Okay. And more people are leaving urban areas such as New York, Philadelphia, Baltimore, Miami, Los Angeles, Seattle, Houston, Chicago. Main cities tend to have, I guess, what I said before was social economics or outside investors moving in, and gentrifications are moving out. So they have to go into rural area. So that's why we have this map for you in your disposal. So first time in 50 years that counties within urban center, more than 250 people, 250,000 people, excuse me, experience negative growth as a category. In other words, like I said, maybe single men and women just got out of graduate from college versus newlyweds. So even the newlyweds tend to move out to rural area. Thank you, Carl. Definition rule in real estate consider numerous factors. In other words, the fact findings are including size of the land. So it could be 10 acres to less than that, or if you have 10 plus acres, less than 20, maybe shoot my way. I will price it out for you. Once the loan is submitted, I could submit an exception form for you. Okay. On a lease, 1 acre, more than 50% of the land is vacant. Yes, we could do that. Supplies on heating sources, water, system. Septic system could be somewhere you have your own wells, water coming through. It must have those sources, heating, water, and septic system. And if you farm, raising animal, those are the case by case. It depends. If you have a chicken farm, it's a caged, and maybe less than less than 50 square feet, stuff like that. Maybe it's case by case. Getting the property required using dirt or private road. It has to have a road, or it could be dirt road, or it could be paved, what have you. But the house next to comp, it must be um, not less than 1 mile, considered to be under rural property. Okay, so another key component for appraiser to indicate as a role, appraiser complements on a appraisal report, identify subject property and or neighborhood as a role, is that anything from village to townships, there are some in this area, so there are townships rather than it called city. So it could be borough, village, or township. So that could be considered under rural properties. Okay, so here are the regions. Overall, Northeast, urban versus rural home ownership. So these are the indicator from Northeast to Midwest to South and West Coast. So in a rural, if you consider West Oregon, let's see, California and Nevada, Idaho, and state of Washington, 77% are rural area. That's pretty a lot, considering Northeast region, 83%. And look at Midwest, like up and down from Michigan to all the way down to Texas. So these are the rural percentages. That's a lot percent. So we need to get their home ownership in there into those properties to maintain in under conventional and non-QM as well. Okay. So about rural home ownership, pretty much what I said earlier, you have considering stigma, but it is what it is. The population is still growing in rural area as we speak. Like I said, married couples, household, maybe newlyweds, or maybe older folks generations, baby boomers. They want to their kids out of the house, or their children moved out or grandchildren moved out, and they want to downsize and they want to move to quieter rural area. Yes, those are the things right there as we speak. And furthermore, to compensate and proportionize, balance it out from owner occupied to second home to investment properties, we could do that. So, and lower cost living, paid off the loans, like I said, in different circumstances and life changing events, what have you. Maybe they want to renovate their homes, expanding their houses, interior or exterior. But again, I want to emphasize that these property cannot generate income property, right? So in other words, substandard of rural home ownership to second home or owner occupied. Yes, if it's investment, let me know ahead of time in this property, and I will submit some exception request form for you. It's a case by case, and also on seeing it under a discretionary. It's up to them to, hey, we got the DU approved on the conventional. Let's see what happens. Let's roll the dice, and I will 99.99% of the time we will get the exception approval for you. Okay. And moving forward, that's the end of rural section. And also going back, the rural neighborhood must be at least 25% built. So it cannot have empty vacant homes down the street or vacant home 2 miles away in a village or township or boroughs. All right.
Yeah, and John, really, but let me interject before we get to the
Sure.
manufacturer section. One of the statistics that I found was motivated a lot of this. With the market experiencing a bit of a downturn, um, the U.S. Census Department was indicating that about 20% of all overall properties that are available are located within these rural properties, and another 7% on top of that is typically what we would call that manufactured housing market. So collectively in a down market, you're looking at 27% of a potential untapped pool of
That's
people that
correct.
that, that are available. So I think that was a big reason for kind of us looking at a slightly untapped market where we
Yeah,
do
that's
excel
correct.
at,
Yes.
that some of our brokers may not be thinking about, or other brokers that are not currently working with us may know about. So yeah, all right.
That's very interesting facts right there.
Yeah.
Is that I always think outside of the box. In other
Mhm.
words, if you give me one loan, hey, John, this is what I have loan scenario. For me, from the past to the present time, I always give 2 or 3 options for you, for Mr. and Mrs. Brokers, and for
Mhm.
your borrowers to present to them, right? Is that conventional, rural property type, or manufactured property type, or non-QM sector, right? So we cover both ends for
Mhm.
you, for your borrowers. So I give those options for you. And Carl, thank you for that facts.
Yeah, yeah.
Yeah.
All right, let me transition over to the
Yes.
manufactured
Life
side.
manufacturer, yes. Okay. So what makes a manufactured home? There are different categories. In other words, um, back in late, I guess, 1889, early 1900, when Sears Roebuck Company came on board, it was a prefab. So they wanted to have a quick foundation and quick build and sell for these builders, right? So there were another stigma came on board and say, hey, these are manufactured. I don't want a prefab. I want a real deal, right? From the ground up and built. So our Fannie Mae, Freddie Mac, Ginnie Mae, USDA, which we don't do. I will cover that for you. HUD, Housing Urban Development, came on board in 1974 and say, hey, they are a lot of home ownership looking for this type of homes, right? So what they did was shortcut the end of the bargain, meaning mobile homes on the wheels. So now, if the mobile homes on the wheels, you can get that loan. That will consider as vehicle. In other words, you go to auto loans, you buy a car, right? On the 4 wheels. In the similar fashion, on a mobile home or modular home with wheels, you could get those type of loans. I kid you not. So my late father used to work for a Ford Motor Company under, he was a senior VP under Lee Iacocca back in the day. He told me the story where the homeowner would come in, present it, and say, I want to get a loan for mobile homes. Ford, Chevy, and Dodge did that. And moving fast time forward in mid 80s, they said, hey, we can't do this anymore. So what big 3 auto company did was they present that to the major banks. Major banks said yes. In 1976, starting under the HUD, they came out with manufacture homes. It cannot have wheels. It must be on permanent foundation with working and sewer and septic has to run and hookups. Those are the main caveat to consider as manufactured homes. Other considering factors are the HUD regulation compliance under the local, state, and federal comply, right? So with that said, if you want the loan, Mr. and Mrs. lenders out there, we will do it under these regulations. You have to comply. HUD data plates and HUD certification labels. So when you order this appraisal, 1004C, the appraiser must know if this is manufactured. They have to submit HUD certification labels and HUD data plate. HUD data plate is considered as maybe VIN number, right? So each manufactured home has their own data plate, AKA also known as VIN number to each manufactured homes. And if they don't have that, at least one, we cannot do the loan. Okay. And I have originated not just single unit manufactured home, 2 units and 3 units. And I submitted exception request form with A&D mortgage and it got approved. So it's case by case. So let me know ahead of time and I will do that for you. And so other than that, there's no stigma, but other than following, comply with the HUD regulation code, substandard, and it has to build after June 15, 1976. Okay. Before that, it'll consider as mobile or prefab homes. Okay. And it has to be structurally sound and it has to be all weatherized. And the roadway has to be paved. It has to have street number and street names. Okay. And about home buyers, to be mobile homes make up 6.4% of the US housing sector, right? Out of that, 8.5 millions of them down slightly in 2011, according to US Census, right? So these homeowners are not poor. About 50% of the household mobile homes consider main full employment or breadwinner. Out of those 50%, 23% are retired folks. So we will consider SSA income and we will do that under conventional Fannie and Freddie. And you could do WVOE or full doc or 1099. It depends on their income structure, right? So affordable housing options are working people. So another stigma where not necessarily has to be single family residence or single family dwelling or single family condos or what have you, right? Manufactured homes are very, very beautiful. Thank you, Carl. So these are the stigma where a lot of those old generation brokers, old generation homeowners thinks that, nah, I want to stay away from those couple homes. No, not necessarily. Look at that. It's a beautiful interiors. Those floors are prefab or maybe hardwood floors that are grooved, tongue and groove structure, and it's easy to install and they're durable, easy to maintain. like a traditional oak, redwood floors or what have you, or pine floors. And you have to maintain those floors every 5-6 years, what have you, right? So these are manufactured homes. So if you look at the corners, these are permanent foundation or fixed foundation. Even this home, right? One below, yeah, one above, one below. It must be on fixed foundation, permanent foundation, to be considered as manufactured homes. Okay, beautiful homes. What makes us different? Well, our motto statements is the power of yes. We do a streamlined process, advanced technologies, innovative products such as conventional FHA, prime jumbo, non-QM sectors, right? Competitive compensations to lender pay compensation up to 2.75%, or borrower pay compensation up to 2.75%. And then there are onboarding process, setting up right expectations with your processor, my processors, myself, and Mr. and Mrs. brokers, setting up right expectations and having a good rhythm are the key to have smooth transaction from start to finish or start to funding. And my fastest time funding was 14 days for the 12 months bank statements. My coworkers here funded 15 days, 18 days, and East Coast people funded 19 days, stuff like that. So we will do it for you. We will go behind the scenes for you. Okay. A&D lending options for rural manufactured properties. Yes, like I said, conventionals, I will price it out for you. It's not in the website quick pricer yet. It's implementing conforming high balance, Fannie and Freddie. We will do that under high balances as well. WVOE 1099. Those must have DU approved or LP accepted. Okay, for our senior underwriter to underwrite those each loans for you. If it's a full doc, don't worry about it. So even if it's full doc, sometimes they have DU findings, right? Reserves. Sometimes they have 4 months reserve on their full doc, or 6 months. My competitors, my brokers are telling me that my competitors they're doing 6 months, 9 months, 12 months under conventional loans. Non-QM loans, DSCR, full doc, 12 to 24-month bank statement, 1 or 2 year P&L, asset utilizations, WVOE, 1099, and foreign national and non-permanent residents. So under non-QM, we only require 3 months reserve, considering purpose of the loan: purchases, rate and term, and cash out refi. Except for foreign national, we require 12 months reserves. Okay, so non-QM WVOE 1099, WVOE, we will use Fannie Mae 1005 form. That's the official form for WVOE and also for conventional WVOE. 1099, we will do independent contractors. Each end of the year, they will receive 1099 form, right? Under non-QM, we will do that. Also for conventional, do that for you, okay? Scenarios for rural properties. Thank you, Carl. It's pretty much simple, actually. And like I said earlier, it cannot have income producing properties or working farm. Those are the main things to look at, right? When It's anything that you do is when you interview your borrowers is that common sense originations, common sense underwriting, right? So if it's under the rule and you have a borrower, hey, Mr. and Mrs. Broker, can you get a lender that does rural property? Yes. A&D mortgage will, right? So under this scenario, single family residence in New Hampshire, that's the Northeast region. Yes. Loan amount 577, 800,000, LTV 60%, purchase price 963K, 30 years term fix, and they want to do 1099. There, here it is, non-QM. And if you want to do conventional 1099, let me know. I will price it out for you as well. Okay. So easy peasy, right? Manufactured home non-QM. Pretty much, like I said, it must have be on fixed permanent foundations, and other compliance is that under the HUD data plate and HUD certification label. Those are the two things that we need from the appraisers when you do appraisal report. Okay. Mr. Isaac has manufactured home, 680 FICO, no mortgage rates, manufactured home, Louisville, Kentucky, bluegrass state, right? Loan amount 176K. Our minimum loan amount goes down to minimum 100,000 K, right? LTV 70%, 251, 428, 30 years fix. He wants to do DSCR, buying his rate down, and plans to pay off in 3 years. So basically, DSCR 3-year prepay. That's what he wants to do. Easy peasy, right? Right there. He just told you the whole scenario right here. That's what he wants to do. The purpose of the loan, right? Okay, non-QM, 7.875, PNI, 1276, discount point, 2 1/8, right? So right there, we go down to DSCR ratio down to 0. If it's a 0, there will be an eighth to 0.5% hit to the rate, and I would have to submit sometime. Most cases it's less than 0, considering we get 1007, right? DSCR with 1004, including market rental survey. But if you do have lease agreement, signed lease agreement for new tenant coming in, we will use that. If it's a greater than 1, hey, great. There will be no hit to the rate, 7.875, 7.878, right? And 3 months reserves. And when you do DSCR, make sure you have 0 incomes and 0 DTIs. And you are allowed for gift fund to use, but borrower must use their own 20% source of funds to consider using gift funds for down payments, for reserves, and closing costs. Okay.
Right. All right. Great. And before we get to the Q&A, so we can do a quick summary of sort of what we've covered, is that there's a lot of opportunity out there. There's a big market of up to 27% or so combining rural and manufactured homes. You've got a lot of market trends that are helping steer this direction. You have urban markets where the rents, particularly for potential first-time home buyers, millennials, Gen Z,
That's correct.
are really up there. You have trends that are changing in work habits, so you don't have to do a commute necessarily to an office downtown anymore. You could work from a manufactured home slightly out in the suburbs, rural areas, if you want to have a peaceful, quiet existence. Limited housing supplies, particularly in some of these urban markets. And you can reach to move down buyers, move up buyers, first time home buyers.
That's correct.
And even though I think if people immediately, I mean, there are people
No.
who might need to, well, you might be the exception.
Yes.
I mean, I chose that example of New Hampshire because I grew up in a slightly rural part of New Hampshire, and I still like the rural parts. Um, yeah, there's a lot of opportunities there again for retirees. You can do these as rental incomes. You could undercut some of this overpriced rental market by maybe investing in a mobile home or
Hmm.
excuse me, a manufactured
Manufactured
home.
home.
And as we've shown with a lot of the photography, I mean, these are not what people immediately think of as trailers that you see, and after a disaster.
That's correct.
There's a lot of very high end mobile manufactured housing providers who do options just like regular builders. So if brokers are working with either realtors or directly with consumers, they could steer them in we steer people to some degree towards alternative financing. This might be an option towards an alternative housing
That's
type or
correct.
lifestyle that they're not even possibly even considering. But if you could own your own home and have it on 5 acres and supplement your income doing something that you enjoy, if it's gardening, and you just turn it into a small working farm, growing strawberries on the weekend for the farmers market. I mean, that's an option. So there's a lot of possibilities, is what I think. A lot of the points that we're trying to get at with this group is that it's just, I think immediately you go after the quick, easy potential loan, and I think we're trying to say these loans are just as easy. We can close
Yes,
them just as quickly.
that's
They're
correct.
they're affordable. The documentation requirements are not going to be as difficult as trying to do a USDA loan sometimes, um,
Or FHA loan.
or FHA loan. So there are a lot of potential opportunities
That's
for
correct.
people willing to, think a little outside the box.
So basically, what I want to touch up on, piggyback what
Yeah.
Carl said, was that the possibilities are endless. In other words, if you're living in West Coast, California, state of California, Arizona, Nevada, Oregon, Washington State, is that these are the energy saving manufactured homes. In other words, they are builders out there, manufacturers out there. They are um, wildfire proof, weather hurricane proof. If you live in southern Florida, southeast coast, it's a hurricane tunnel, right? In the Midwest is tornado tunnel. So they are possibilities are endless. In other words, there'll be earthquake proof. Right now, there are, as we speak, the home builders, constructions, and engineers, they are manufacture home where earthquake sway proof. They sway and they will not crumble. Even the windows not crumble. So possibilities are endless. Okay, because as you know, recently, Northeast and Midwest had a major FEMA flood, right? And hurricanes and tornadoes. So with that said, all these engineers, all these constructions and home builders, they are working together to manufacture these types of homes. So don't get stigma where, oh, manufacture, I'm going to stay away from. No, some of the manufactured home I've seen, they cost anywhere from 500,000 to 1.5 million. So it's better than single family residence. Okay, that's all I wanted to say.
All right. Well,
Yeah.
we'll go ahead and open it up for questions. We just got one in from Jack.
Okay.
Would we consider a manufactured home in a park where the land underneath is owned fee simple, but the common elements are subject to condo rules?
Yes, you have to go through condo association or HOA association, consider as manufactured home. But be careful when we do condo review, either limited or full review. Under those reviews, it'll say on the documents, mobile properties. It cannot say that. If it says that, stay away from it. it has to say manufacture/condo. Then we will do it.
Okay,
Okay.
that's a good question. All right. I'm not seeing any questions come in on Facebook yet. Let's go ahead and keep going. So if anybody else has
Yeah.
questions, feel free to type them in the Q&A section or the chat if you're in Facebook.
I'm also on LinkedIn, so you could look me up on LinkedIn, or you could give me a call directly or email me any scenarios you might have. So
Yeah.
feel free to reach out to me and feel free to use me as resources. And I'm good at what I do in this industry.
Yeah, and for the people who pre-registered, you will get an email with John's contact. And then for people watching on Facebook, I'll post his contact information as a comment, so you can reach out to him at any point as
Awesome.
well. All right, so I think we possibly have answered every question. Let's give it a couple more
Yeah, a couple more
minutes for
minutes. Yeah.
folks to mull over what we've talked about. And are you seeing do you see any trends that you're seeing with the buyers that you're working in? And are they millennials trying to relocate? Are they retirees moving
Yes.
down?
So even our generation, our age group, right? Even 10 years younger than me, they are looking for manufactured homes. They are looking for rural properties because they want to get away from gentrification. Like I said earlier in the presentation, is that they're getting kicked out, like Los Angeles Art District, even in Brooklyn, Bronx. That's where I was born, and Philly Art District, and that's where I grew up in Northeast. They're getting kicked out because of these outside investors or in-state investors, because of they want to create you can't go wider, you have to go up. So in other words, rooftop decked, that's another amenities in major cities they're looking for. So with that, they want to build their families, right? Newlyweds, and they want to go out to the rural area where it's quieter, working from home, WFH, work from home, kind of remote, right? So, hey, you got your privacy. You could do Zoom meetings. You could do internet. You could do everything from home. Convenience of taking care of your family. Yeah. There's no age gap anymore.
Okay, well, I haven't seen any more questions come in, so I think with that, I'll go ahead through the wrap-up slides, give people just a little bit
Yeah.
more.
Okay.
Okay, so as John mentioned, there were a couple tools that we do have.
Yes.
He's talked quite a bit about appraisals and our quick pricer. You can find all these tools on the main page of our website, admortgage.com. As he mentioned, the quick pricer is going through some revisions, but right now, if you've got non-QM scenarios, you can price out pretty much anything, including rural and manufactured home scenarios. Appraisal Center is our centralized appraisal platform. We have over 20 AMCs that you can take advantage of and manage thousands of appraisals at any time. If you want to go appraisal crazy. A&D'S Studio is a platform that operates like Canva. It's our centralized marketing platform. You'll be able to customize flyers, postcards, social media, emails, pretty much whatever you can think of. We update it fairly regularly with maybe one or two new layouts a week. So there's always something fresh in there. We do this weekly service to the broker population, educational series of webinars. So next week, we're going to talk about how you can do some easy file setups or steps to improving your file setup so that we'll be able to get to your closing faster. And hopefully all you'll have to do is really get the appraisal. The week after, we'll talk about one of our specialties, as John's mentioned, foreign nationals and non-permanent residents. Then again, the week after, we'll do sort of a deeper dive on our website. There are folks who don't realize there's a lot of information there and there's a lot of tools available. So we'll take you through some of the hidden sections. And then the last part is we'll look at various investment loan types that we can offer to brokers and borrowers. Um, and then starting next week, again, we've mentioned that we've been using Zoom to do some RSVPs. We're going to make it a little easier for folks and do away with the RSVPs and not use Zoom. We'll be using a live streaming platform um, exclusively, and we'll be streaming collectively at the same time on Facebook, YouTube, LinkedIn, and then if anybody's involved with the Facebook non-QM exchange group, all of the links are here that'll take you directly to those sites. So you'll be able to copy and paste it out. So you'll want to make sure you follow and subscribe. I've already gotten 2 questions during the course of this webinar about getting either the presentation or recording. So yes, we're recording this live now on Facebook, and it will be available as soon as we finish. I think maybe it takes a minute or 2 to process, but we're also doing a separate recording, and we'll post it up on our website at admortgage.com/learning-center. It'll be this and all of our past and all of our upcoming webinars. So that's our central housing place to learn anything that we're talking about, including we've referenced millennial home buyers a few times here. We did do a millennial home buyer webinar just a few weeks ago. So I think between that and this content, if you combine them, I think you've got some potential untapped markets that you could take advantage of. And for the ones who've registered, there'll be a very brief survey after this to let us know that you guys can let us know how we did, how you heard about us, what you thought about the content, whether you'd recommend us. Hopefully you will. And then again, just to like and subscribe and follow us on all of our social media platforms. You'll find out about other webinars we've got going on, any sales promotions, any new products, any changes to the underwriting. So we're on Facebook, we're on LinkedIn, we're on YouTube. We do have a chat bot, news bot on something called Telegram. So if you go out to Google Play or the App Store, type in Telegram, you can download it and then just subscribe to this @mortgage_bot. And it'll be another platform to get social media information. And there's a lot of one button features on there to go access videos immediately. So it's a pretty helpful tool that we've been building out over the last few months. And we mentioned the non-QM exchange group. And the last thing, of course, is if you're not already working with us, to become a broker, become our partner, and you can start that process either with John or you can go to the website to admortgage.com and click up the sign up button. So that's everything we had to cover. There's no more questions that have come in. So if that's the case, I'd like to thank our viewers on Facebook who are watching us and those who joined us through Zoom. We hope you have a great, wonderful day and rest of the week. And again, we'll post up John's contact information in case you want to start closing on some manufactured homes and rural deals this afternoon.
Yeah, looking forward to it.
All
Thank
right.
you, folks.
All right.
Thank you, Carl.
Thanks, John. I appreciate all your time.
Absolutely.
Bye.
Thank you. Have a good day. Bye.
You too.